morning, people, or whatever the time of the day you are watching this video, and welcome back to another weekly market update from Zylostar.
Markets rallied strongly last week on solid earnings and surprisingly weak US jobs report, while geopolitics remained dominated by the Iran conflict, the Strait of Hormuz, and the risk to global oil supplies.
Which, yes, markets were a little bit volatile as anticipated, but moved as we had spoken about in the previous week. Let's see how that's looking on charts. Alright everyone, here we are kicking off our weekly market outlook on the 5 major assets. Now starting with Nasdaq, as I highlighted guys to you in the previous week, Nasdaq was at a price where it wasn't really a good price to trade. We needed more intel to trade and we got a lot of those. So technically we got a beautiful confirmation for a long entry here. Hopefully you guys had entered that trade. And also we got a lot of fundamental reasons for this impulsive move to the upside, including a lot of positive earning reports to big corporations like Microsoft, AMD, and also Amazon and many more. So from where the price is right now, it is at a resistance. Even though we do have some bullish indications here, the price could continue moving to the upside because that is the momentum being built post these positive earning reports, and also hopes that Iran and US will reach to a conclusion in peace talks. Also, last week, the geopolitical tension between Iran and US has escalated, which was a very probable scenario I highlighted for you guys in the previous week that should have caused the price of Nasdaq to go up, and that's what happened. So this is where we are at right now. The price could continue going up due to the optimism currently about the earning reports of these companies, but as in a trader, we always want to get better entries. So if we see a retracement to the support with a confirmation for a long entry, that would be optimal for us to trade it. Now, SpaceX had, as I had anticipated for you guys earlier, we saw a negative earning reports to SpaceX, and now SpaceX had announced that they are working side by side with NVIDIA to launch a new satellite that could possibly improve their situation in the market. However, the price of SpaceX share is still far away from where it originally started, as in 135 per share, which should suggest that it is still not optimal for an investment in that stock. Now, this is about Nasdaq. Going into gold, we have a beautiful spike in momentum to the upside, and this is exactly what I've been highlighting for you guys for the past 2 weeks, that we are bullish on gold and we need that fundamental factor to happen. Now, yes, the geopolitical situation escalated between Iran and US, yet we saw a rising tension again between Russia and Ukraine. That was a side effect why the prices of gold went up, but the main reason why the prices of gold went up actually is because we got negative job data. So this negative job data suggests that it will be very difficult for the Federal Reserve to increase interest rates by September, and that's what caused gold to spike to the upside, even though it started moving to the upside prior these reports to come out. And it gave us beautiful technical indications for actually multiple beautiful technical indications for long entries. Especially at this price range here, post breaking above this doji, a beautiful breakout. Hopefully you guys had participated in that trade. If not, then we had a beautiful setup also here, multiple setup actually for retracement to go long on gold, targeting this resistance, which is exactly what happened. Now, the price is in the overbought area as in momentum, and it's actually at a strong resistance, so we should anticipate a retracement to the downside before anticipating a long entry. Now, despite that negative job reports, which was the third worst job data to be published since Corona in the United States, interest rates are still more likely to be increased by September. Reason for that is Kevin Warsh, the federal chairhead. Also, Goldman Sachs are highlighting that the ultimate inflation target for the United States federal is 2%, which is way more important than the job data to them. And Kevin Warsh had stated that the results of the coming CPI that shall be in mid-August is going to be critical for their decision to happen in September. And actually, few other federal members highlighted that there is more anticipated that the interest rates will be increased by September to fight the increasing or ongoingly increasing inflation. And due to the volatile oil prices that we've been witnessing lately, as in Iran and US tension easing and escalating back to back, this ongoing tension had kept the prices of oil volatile. And due to that, we are more likely to see positive CPI, which should push gold prices down, could actually cause gold to make a deeper retracement than this support. We could see gold going to 4,170 something. If we get those CPI is positive upon the dollar, and that shall boost the expectations to increase interest rates massively by September. And if we get positive CPIs, interest rates goes up by September, the target of gold reaching 5,000 by the end of this year is going to be massively reduced, and we are to anticipate gold reaching 5,000 probably by the first quarter of 2027. So that is a very probable scenario. Data right now is pretty much on both sides. However, it's more weighted that we are to get positive CPIs and interest rates to be increased. So we have to be very cautious trading gold and assets overall that are reflected or affected directly with interest rates. So this is with gold. Going to EURUSD, we saw EURUSD moving beautifully to the upside. And also right now it is creating for us an ascending channel pattern. Even though we have an impulsive movement to the upside here, still price is at a resistance. So what we ultimately would favor to see is a retracement to the downside, which is also very probable to happen if we get positive CPI news on the United States dollar. So we see that deep retracement, and then we can anticipate a movement to the upside. However, a far movement to the upside to such price is very unlikely right now. So let's just focus on this retracement to that support for the upcoming week. Now, going into Bitcoin. Bitcoin had faced some troubles in the previous week where we had about, if I recall the number right, 1,367 Bitcoin stolen from wallets. This happened in the previous week, post the previous week before it, having the stocks of Coinbase falling down. Crypto nowadays, guys, is not the highlight of financial markets, especially throughout all this volatility and increasing, let's say, negative impacting news upon crypto. Even though we do see some bullish movements to the upside upon Bitcoin, notice that also wasn't directly because Bitcoin had demand on it. It was because of the weakness of the United States dollar due to the negative job reports. We have to be very cautious about our trades in the upcoming while, guys, but to what I can estimate, Bitcoin is still trading within the same range I've highlighted for you earlier, which is 67,000 per coin and 61,000 per coin. Matter of fact, if we get those positive CPI news, we could see Bitcoin falling again, which is the most likely scenario to happen, but not necessarily this scenario to happen, because right now we have also big analysts of big financial institutions having different opinions about the outlook to come. CPI shall give us a clear or more of a clear roadmap to where the price shall be heading of whatever asset you're looking to trade that is affected directly by interest rate decisions and economic reports. So this is about Bitcoin. I would recommend stay away from it for the upcoming week. We shall have better opportunities than other assets. Now, looking at Nifty 50, we can clearly see that Nifty 50 moved exactly as we had anticipated. The ascending triangle pattern, and the price had spiked a little bit above it, and now it's creating for us a bullish pennant pattern. Now, looking at Nifty 50, usually such pattern is bullish and we shall look for long entries. However, the current situation is that the price is at a very, very strong resistance to what we can see. Even though we had a little bit of a spike above this price is still within this candle range. It is formed similarly to a doji, which is to be considered the zone. I am looking for the price to break above it in order to see an impulsive continuation to the upside in Nifty 50 price. So from here, once market opens, if we get a confirmation, we want to go for long entries. If we get a confirmation for a long entry, that would be optimal. If not, then it would be better to some extent to wait for a retracement, right? Get a confirmation at a cheaper price, because momentum, as we can see, is decaying on this asset. And momentum is decaying, it is optimally and a wise decision for you to wait for a cheaper price or a discounted price. That will be it in short for our weekly market outlook for the upcoming week. Thank you for watching. Feel free to leave a like, a comment if you'd like to know about a certain asset, and we'll see you in an upcoming one.